Okay, so, all right. I think we shall get started. I think some people have been here waiting for quite a while, so I don't want to keep everyone waiting, especially we're sitting between dinner and drinks in Singapore. So good morning, good afternoon, good evening. I know that some people were planning to come in from Australia to join us from Australia and New Zealand. So welcome to our fireside discussion, all things about go-to-market. And it's brought to you by Kalai and Co. and Milk and Honey in partnership with Plug and Play, one of the world's largest startup accelerators and most active VCs. So with us on this panel are Chandni Jaga, who leads startup engagements and investments for sustainability in APAC at Plug and Play. She's on a mission to help climate tech and entrepreneurs build and grow their businesses and be profitable. And we also have Kalai Natarajan, who is CEO and founder of Kalai and Co., a growth-focused consultancy for tech startups, particularly in the insurtech and health tech spaces. She's currently strategic advisor for LiveWell, an insurtech startup that's headquartered in Singapore. Manuel Hüttl is also my colleague and CEO of Milk and Honey in Germany. Milk and Honey is a B Corp certified communications agency that nurtures brands and reputations, that also has offices in Singapore, where I am based, and in the UK and the US. He works with a lot of startups and also established companies, and is a published author on reputation management. And me, I'm CEO of Milk and Honey in Singapore. And I think my experiences in GTM, communications, marketing, and business development really kind of came in really handy when I co-founded and led a digital well-being startup a few years ago. So today we're talking about go-to-market, GTM. Essentially, it is a strategy and implementation plan that's needed to bring a product or a solution to market effectively. It's your blueprint for any business that seeks growth and competitive advantage. Yet, we on the panel have observed that businesses aren't necessarily investing sufficiently in developing a robust GTM. So that kind of actually made me think of the saying, if you build it, it will come, they will come. Meaning, if you've got a great product, it will really sell itself. Does that really hold true today? Let me start with you, Chandni, on your thoughts about that.
Thank you so much, Meilin, for the wonderful introduction as well. Yeah, I think this is just an idea that, I think people, many years ago used to think that if your product is good enough, that is all you need to have guaranteed success. But unfortunately, I think, it has a very seductive appeal for founders, especially those who have a very deep technical background. But unfortunately, this product-centric approach just ignores the complex realities of, modern markets. So basically, disruptive technology alone isn't enough to guarantee, commercial success. You need a really proactive strategy to connect with and, acquire its intended audience.
Thank you for that. Kalai, your thoughts on that same statement?
So let me just rewind things about 20 years ago. So I was actually in the corporate and was not in insurance, but in fashion marketing. And very interestingly, there was a CNBC interview that my CEO was doing. And the question was, so what does it take to create a remarkable brand? And it was a big brand company. And he said product, product, and product. Product, product, and product. And the irony of that statement was that the company had suffered a very serious financial setback for several years, where a complete re-strategy was necessary. So what they had done was to kind of close down manufacturing plants and move the company away from garment manufacturing into fashion marketing, which means that the product, when they used to actually just produce from factory into the stores, it sold with some advertising just to say the product is already on the shelf. It did sell, but over time it stopped selling that way. So they did a revamp at that point to save the company, and the company was saved. So the irony of saying product, product, and product was that by that time they had already figured out that products alone wasn't enough, but it was the right thing to say 20 years ago. So being product obsessed was the be all and end all. And every CEO, regardless of the reality, actually wanted to put all the glory on the product, because if you didn't say that, it means your product is not good enough. Now, you fast forward that 20 years now, it is almost compulsory to say that you're customer obsessed. So we went from product obsessed to customer obsessed. Okay, so it's fashionable. It's almost a prerequisite for you to say that you are customer focused. But the question always is, do you really know the customer? And what have you done in the startup world to fully understand the customer? Usually the startup story starts with a very good founding member story. Now, that founding member story, though there's truth in it, is usually a hypothesis. I question how many companies actually go out to the market to test the hypothesis before spending, hundreds of thousands of their own money and then going into financing and funding. Is that strategy, is that hypothesis actually ever tested in the market, is the question. So we've moved from having to appear to be product obsessed to having to say that we are customer obsessed, but have we really done the right thing to truly call ourselves customer obsessed? That's the question.
And we will definitely get back into that same question later. And Manuel, I really want to get your point of view on this one before we head into some discoveries.
So probably a very obvious answer from me would be definitely not only focus on engineering, not only focus on your product, focus on comms, focus on marketing. But I think it's not that easy. I think we need to look at these kind of things case by case, because there are products out there that are running on themselves without the need of an extensive marketing campaign. But there are also products, and I want to come up with an example like Red Bull. Red Bull, to me, is not a product that is, the taste is it doesn't convince me by its product, right? But the marketing that Dietrich Mateschitz put in there was a game changer. He directly put 30% out of his revenue back into marketing. And we all know where Red Bull stands now. They created a full media house, a powerhouse. They embracing different markets. So I think that's a very good brand to see the value of great communications and great marketing, even if you do not have the greatest product on earth. So I would say it's a case by case decision. However, I would love to remind everyone that we also need to face the world and how we all use information, and that the level of getting attention for any product that you go to market with is super low. So I come back to my head of wearing my head as the CEO of a comms agency, where I would say, yes, definitely a comms strategy, a marketing strategy, a go-to-market strategy is needed. The intensity and the balance of I think is the right way to go. So that's my 50 cents.
Thank you for that. And that kind of kicks off talking about numbers. We recently ran a poll with a number of startups and SMEs, and the question was, how would you prioritize your funds for the different functions within, that's needed to make yourself successful? And 50% said GTM was where they would invest money and time on, and 37.5% on people, and only 8.3% said product roadmap and product enhancements. The question I have for you, Chandni, is, do these scores actually surprise you? I mean, in your capacity as ventures lead, do VCs generally have in-depth conversation about GTM with startups or have expectations on deliverables in this area, which is why we're seeing this kind of numbers.
Yeah, I guess it's very important, to see where in their fundraising stage the startup is, because I think immediate short-term as well as long-term priorities can shift depending on, whether they're pre-Series A or whether they've already validated their technology and they just want to focus on scale up and commercialization, right? And I think the pain points can vary as well. But I would say I'm not as surprised now, because I think a lot of funders are starting to realize that having a great product alone is not enough, right? We have seen so many examples. I think there's quite a few other startups that have a subpar product, but because they've managed to secure, a lot more elaborate distribution channels, they end up scaling up, so quickly and doing a lot better. So at the end of the day, I think a lot of investors, we also look for a lot of quick ROI and a nice return. We also try to look for startups that have good exit potential as well in a much shorter time frame, in a much shorter gestation period as well. So if the founders are more focused on, what is their target customer segment, how do they intend to reach those customers, right? What channels are they using, and how are they best positioning their product in a way whose value is immediately appreciated by their customer segment? Those are a lot more important than how well your product functions on its own.
That's true. I think, Kalai, I know you and I have had numerous conversations about, the importance of GTM, and I think from some of the conversations that we've had in our respective industries, there's also that possibility that there is a misunderstanding of what GTM is versus marketing. So the question I have for you is, do these scores also surprise you? Because you've worked with startups in your previous roles, particularly in the FSI space. What's your kind of outside looking in of incumbents and startups when it comes to prioritizing GTM?
So let's just start by saying, I have a question, right? So when we talk about GTM, what in people's mind is GTM? Because as you correctly pointed out, you can actually see a little bit of misconception that marketing is GTM. I bought some ads on Facebook. That is not completely GTM, right? It's actually a short-term strategy to get a particular product out in the market successfully. So whether the definition of GTM is consistently understood across countries, across companies is my first question. Do they understand it the same way? So that is one. The second thing I also wonder is, many companies, and I've seen this in financial services, is that it is all founder-based. So the founder's profile building activity is often also confused as marketing. You see a lot of founders actually being out there telling their story. At conferences, they have many speaking opportunities. Again, the story creates intrigue, but that doesn't translate into sale. So the definition of GTM and kind of like the focus on the owner-led, the founder-led stories, I think this could be a reason why people think that maybe they're doing more than they already may be. Now, just like taking a step back into the industry that I'm most familiar with in this space, which is the insurtech and financial services startup industry. The challenge that I see in this particular industry, and this may actually apply to other industries, but let me just be a bit more specific about my industry. The challenge that we face in this industry is that the idea of go-to-market for many startups is to actually arrive at the doors of an insurance company and then riding on their existing distribution channels in order to bring the product to market. So that tends to be the case in this particular industry. Now, what you're assuming here is that the incumbent, in this case, the insurance company, actually knows the customer extremely well. This may or may not be the truth, because the insurance industry generally operates in such a way that you distribute through a third party, either a broker, a financial consultant, agent, or a bank assurance partner. So they face the customer. You're always 2 steps removed from the customer. So assuming that they know the customer well, therefore your product will actually get distributed well, may or may not always be the case. Plus, the distributor never meets the startup. So if I'm an insurance agent, I will never meet the startup whose product or service that I'm trying to distribute, but they are depending on me to distribute the product. So number one, I never understand the product or service that the startup is bringing in. Number two, if I'm not convinced, how good a job will I actually do in actually bringing this to market? And three, I'm also being dependent upon, as the financial consultant, meeting the customer to bring market research back to the companies. Again, is that really the job of a person that is trying to sell an insurance product? So there is actually a breakdown in the communication. So let's just directly define, in my opinion, what GTM is. We are talking about market research. Is there a market for the product that you have developed already? It's like I said, the owner's personal story is a hypothesis. You need to have already tested it. So the market research is critical. The second piece then is the product positioning. Okay, and the product positioning and pricing, of course, you need to have a clear understanding of the competitive space. Number three is customer engagement and distribution. So these are some of the main buckets of go-to-market that need to be considered. So when you talk about, X percentage, 30% or 50% of the people say that they are prioritizing this, are these the go-to-market pieces that they are prioritizing? That is the question.
And yes, I think that is a question that I don't have an answer for, especially when I look at, the respondents saying 50% of them would prioritize go-to-market. So what's the quality of that go-to-market strategy?
And the other thing I'll add, just to Manuel's part, I'll throw this back to Manuel, because there's also this point of view that because communications, public relations is earned media, there's also this impression that it's free. And I wonder whether those misconceptions also kind of like get into people's definition of, investing in go-to-market, because you may not be looking at it from, okay, if I had $1, am I actually putting 50 cents into go-to-market, or I'm prioritizing, but I think I can get it done for 5 cents. That too is not clear.
Yeah, now if I can just add to that, I would say that in the process of building a startup and also finding investors and VCs, and this is something that Chandni probably also has a strong opinion on, I think you definitely need to have a proper GTM strategy in place already, because otherwise you don't get a dime. At least not in Central Europe, where we are very, very focused on not just the idea of a startup, but we want to really create a business plan, a go-to-market strategy. So that's and the things you mentioned, Kalai, in terms of research, knowing your audience and everything, must be super well defined up front. But I like that you turn the conversation a little bit more into those intangible assets, like PR or marketing to some extent, because what we usually see in our day-to-day basis is that those go-to-market strategies, the insights on audience, the insights on the product, everything is there, but that is not baked into a proper narrative, and not into a proper messaging framework, not into what you said before, Kalai, the story of the company. What is the story that you want to sell? What is it that you want to go out with? And to grab people's attention in an oversaturated informational world, it is fundamentally important that the story clicks. Right, the story clicks, and the story then needs to be attached to the products or services that you deliver. That's a given, but it is a story, and based on the story, you then create content that you then can use for digital marketing, etc. But that is a fundamental first thing that needs to be right.
Exactly. Thank you. And I think, Manuel, I'm going to just pick up on something that Kalai said about, communications. Now, obviously, I know that marketing communications is something that people do think about, and it is important, especially in the early stages. You need to build a brand, you need to be visible. So, and you've worked with business of varying stages of growth. So what have you observed about how large enterprises leverage communications when taking their products and solutions to new markets that SMEs and startups can really learn from, so that they too can prioritize communications and marketing in their go-to-market strategy. Manuel?
I'm sorry, I thought this was going directly to Kalai. Well,
no, this is for you.
no, I'm sorry, I was confused. No, I really think that you know, the fundamental importance of having your story right and create a going out strategy, that this is the holy grail of every startup, of every company. And I saw companies failing because they didn't have a very tight, very straightforward described story in place. So people out there got confused and they didn't get the pitch, and so on and so forth. I would also add to that first off, grabbing attention from the stakeholders is the most important thing for a new product, definitely so. But I also would add more values to communications, because if you then create a rock solid reputation for companies, that this also can act as a resilience. This can act in very advantageous in terms of your competitive displacement strategy. So I really firmly believe that the story and the content strategy needs to be matching everything that you do in terms of marketing and also sales, by the way. So I think, and I had the experience that the best strategies from a go-to-market perspective work if all the different divisions are sitting in one room and get a commitment, get a confirmation about the story, get a confirmation about what does the transportation of the story, what does good look like, and then we can directly support the sales team with our efforts and make sure that they are successful, and then the impact of a digital marketing strategy or a marketing strategy is so much more you know, seen in numbers if things are in line and planned on a 360 basis.
If I can just add a little bit to that, since you thought that question was directed at me. I think Chandni was making a very interesting point about at what stage of the funding cycle is the fundraising cycle is the company in. So it then boils down to and if you kind of like look at that in the context of building that narrative and telling the story that you're talking about, even for very early stage startups, if you are still two men sitting in a garage and coding, even at that stage, the two men sitting together or the two women sitting together must actually be able to talk about their solution in the same manner. Consistency even between the two people may not actually exist. I've seen many founders that two or three founders within an organization, and they are still at a very early stage. They can't articulate their proposition in the same manner. In fact, some of them are rather diverging because the way they look at the solution, even among the two or three people, tends to be a little bit different. So when you talk about how soon should you actually start putting this narrative together, I think it is as soon as you sit down to code. Because when you're starting to develop the product, I think you already should know how to actually bring this to market and what problem is it trying to solve. So that narrative needs to start coming together as quickly as you start to conceptualize and develop the idea. But of course, it is not a static process. You have to often revisit it to see whether your story still holds, or have you kind of like evolved into something else. Sometimes you start with one thing and you realize you're evolving into something else. So it's good to write it well from the beginning, but to often revisit it and edit it often as you grow your product into a stage of actually getting funding and bringing it out into market.
I would also add that the narrative, as you're describing your company, your product, and the benefits, you also need to look at who your audience is. So you can't use the same, description for both the investors as well as your customers or your partners. So you kind of need to know who your real customers are. You know, the user may not necessarily be the customer, because the user could be a user but not paying for the service. And so the conversation is very different. And so having that structure, that framework is super important. So I'm going to kind of quickly move on where I'm looking at kind of startup failures and what can the GTM strategy help. Now, it's widely cited that 90% of startups fail. It's staggering, but that's the number that keeps popping up over and over again. And according to CB Insights, the number one reason is due to misreading the market demand, followed by running out of funds. And some of the other major reasons is poor marketing and competition, right? So, and then coupled with the thinning investments that we're seeing in the market, startups have to do a lot more with less to kind of survive and actually be profitable, before you even have that conversation with an investor. So I think, Chandni, I have a question for you here is, what should startups consider doing differently as part of their GTM strategy that you feel are critical for success?
Sure. So basically, I think, I also wanted to build on what Kalai said, that, this is a very iterative process, right? And you don't want founders to think that they have to get it perfect. This is something where you have a good enough version out there that works for now, but you keep checking in and seeing, if all your success metrics are being met, and if not, what kind of little changes you can make. But I would say maybe to start off with, a founder should try and embrace the power of strategic partnerships. So whether this is collaborating with, established players in complementary industries, these industries can also help provide access to new audiences, help boost brand credibility. Also, I think it's good for founders to just focus integrating marketing and communications. So, if there's a lot of inconsistent messaging across channels, it can really dilute a startup's impact. So if the founders can, try and craft a really cohesive narrative, either from website copy or to social media presence, this can really reinforce their unique value proposition. And this is something as investors, it's the first questions we ask. What is your UVP? What's your competitive advantage? And so on. I would also still say, niche is still king. So if the founders can resist the temptation to be everything to everybody, if the founder can, define a highly targeted niche, it can still be a really powerful strategy to differentiating that startup. And then it can in turn lead to, driving down customer acquisition costs, and then, even building a loyal customer base, especially if it's a SaaS startup. And I think just generally, just data-driven optimization is just a non-negotiable, for me. I think I would just find that the most effective go-to-market strategies, they're always constantly refined, right? Based on data, not just guesswork. So if there's A/B testing, if there's key metrics that are really tracked religiously, then the founders can be prepared to just adjust the course quickly in response to, real-world results.
Thank you very much. That is that's a lot of things that people should be listening in and taking a lot of notes here. And I think I want to go to Kalai for the same questions. I know that you have got a number of points that you also want to share.
Right. So that same CB Insights that you're talking about, I think it tracked 100 over companies over since 2018 in order to come up with like who has succeeded and who has not. And very interestingly, only 8% failures have been attributed to product, and it is number 9 on the list. So basically, many of the startup founders, you have actually brought out a good product, and it's due to this variety of other reasons that perhaps, as many as 90% of them may be failing. So that's a very good, starting point to have this discussion, in my opinion, because then you know that, you're bringing a product into market. The product is probably least of your problems. So let's start looking at everything else. So where should you actually be focusing? To Chandni's point, actually, first and foremost, understand the market, because market to market things vary. I'll give you an example. In a previous life, I launched the same product in India and in Pakistan. People tend to think that, oh, maybe there's some similarities within the market. No two markets can be any more different. They share a border. That's about it, right? So even in a situation like that, and the product, it's not a very highly it's not a product that involves high involvement. Even then, it was markedly different from market to market. So first and foremost, really understand whether there is a need for this particular product in the market and who the segment is. Have you fully understood the preferences of that segment? Because segment is not one big thing, right? People talk about, a segment of one. Nobody has really cracked it. So do you really understand all the nuances that come as part of that customer segment's preferences? So that is one. The other thing I think needs to be understood very thoroughly is who is going to pay for this. So that is a big part of go-to-market. And in my experience, unfortunately, in financial services, who should pay for it is usually answered with the response, yeah, the deepest pocket. And that becomes the financial services institution, whether it's a bank, insurance company, or payments company, because they are the ones with the deepest pocket. That doesn't necessarily mean they have to pay for it. We really need to look at who pays for this product in a very objective manner and be led by the data of that particular market. For example, per month, per member as a payment strategy works in the US, okay, for insurance products and services, because insurance covers these costs. If you brought that same concept into Asia, you need to find somebody else to pay for it because insurance doesn't cover it. Right? So insurance claim cannot be used to cover a digital service. So we cannot kind of do the lift and shift. You really need to understand who is ready to pay for it. So that is number two. And of course, with that comes, how do you distribute the product? Is the person distributing the product fully understanding the value proposition that you're bringing in, that unique value proposition? And are they able to articulate it? Have you given them a way to articulate it? Have you given them with the research and the narrative so that they can effectively go distribute their product? I think this is another thing. The last point I would say is that what you cannot measure, you can't manage. And Chandni, you also alluding to that. Have your very clear KPIs, do the A/B testing, go do the focus group discussion. And what the market is telling you is golden. Do not use it, do not do it just so that you check the box and then you kind of like go ahead and do what you feel like doing or make decisions based on gut. So take that data very seriously and then make those decisions, manage, iterate a few times, but also have the maturity and have that obligation and commitment to your investor that when something is not working, that you have also factored in what I call a kill point review in your timeline. When something doesn't work over a period of time, despite many iterations, you have to be honest with yourself and your investors and your other stakeholders and withdraw the product and then go back to the drawing board.
Yeah, that's very good advice. I think I think one of the challenges I see in tech startups is obviously try and try again and keep trying, and not really taking the points from or the feedback from customers. And I think some of the most successful businesses are those that really engage the customer, really listen to them, and then iterate. Right. So I think I like to go to Manuel now. I know that there are a couple of points that you want to also bring up on that. What should really, startups really consider doing differently as part of their GTM strategy that you feel are critical for their success?
Well, I want to go back to what Chandni and Kalai said, because it's really important that startups need to show and work with numbers and proof points and evidence and A/B testing. And in an ideal world, they also already prove a certain track record with existing clients. And then we have another tendency right now. Everything is a little bit stepping away from focus on growth to focus on profitability, which is a tough cookie for startups in these days. Yeah. And then I was listening very carefully to what Kalai said. And I mean, if you are a founder and you have a great idea about a product, then you are like an inventor of something, but you are not a marketing specialist, you're not a sales specialist, you're not a product development specialist. You got that idea that could be a killer for the market. But then I think failure of startups always or is also attached to having the right circle of trust around you, working with partners that you can trust for, that are expert in their different sectors. And this is why I see a very good development that, for instance, VCs are trying to bundle more and more of these services for their startups. They are creating that circle of trust where startups do not have the necessary connections. Then they can go back to their VCs and they act as a connector of bringing the right people together. This is a way better approach than just throwing the money into a startup. But being an accelerator means that you are open the doors, you connect the dots for companies, and we cannot blame a startup for not having a 360 experience with things. And this is where, you know, specialists like Kalai or Milk and Honey come into play, where we can support them. So I firmly believe that what I would call a circle of trust or an environment of partners is a fundament for success of every startup.
So true. I think having been a startup founder myself, you know, even though I come with a communications and marketing background, I still struggled. Right. And because no one person can do everything. And I think there's a tendency for founders and their immediate team to want to do everything in-house and do everything on their own. And, you know, we don't take into account that you have other responsibilities and, you know, you're not an expert in that space for everything that you need to do. So I think, yeah, you're right. Partnerships are so important. And I have just one more question before I want to take some questions from the audience. The question I have for you, Chandni, is if you were to give one piece of advice to startup founders who are eyeing Asia or Singapore as their next growth market, what will that be? Sorry, you're on mute.
Sorry. It would be good to remind founders that, you know, localization is not just about translation and language barriers, right? I think founders have to completely rethink messaging, distribution channels, you know, even product features to see whether those features actually resonate with the particular Asian market. I think Kalai brought up a really good example, right? Just because maybe one business model and one kind of messaging works in India doesn't mean it's going to work in Pakistan as well. The cultures can be variously different, even though they all share, you know, a common border. But I would also say, just even equally as important, the founders should try and build genuine relationships with key players on the ground as early as possible. Even if it means you can only afford to send one person on the ground, do it, because whether it's about finding the right distribution partners, or if you're trying to, you know, navigate really complex regulations or trying to build brand trust, building those connections on the ground is going to be your biggest asset. I think those are the kind of insights you're not going to find in any report. And these insights can still help open doors that would usually take outsiders, you know, a long time to navigate. So trying to understand the culture and the nuances behind each of those countries within Asia and send a man on the ground to navigate that would be the best choice.
Thanks for that. Yes, Kalai, if you were to give one piece of advice for a startup founder who is expanding into Asia, what would that be?
I'm almost tempted to say that I will agree with Chandni to have that one man on the ground. So either you send the man or you find the man on the ground. But I will not. Or woman, yeah, I'm using it generically. But like what I would always say is that, if let's say there's a particular market that has been wonderful for startups, like there's a lot of money to be made, and startups going into those markets, whether it's China or India or the US, are extremely successful. Therefore, I have to be there too. Just come out of that mindset, because that may not be right for your product. Products like you could have actually made it, but you have to make your own decision on like whether that market is right for you. So having that in-market knowledge is important. And that in-market knowledge is also the thing that is going to help you customize and personalize the solution, the last mile of that solution to make it right for that market. So you have to actually know the market, make the selection and the segment, put some time, money, and effort into that. So that is the one thing you absolutely have to do. But I also have a request of the VCs, the private equities, and the family offices that are funding these guys. Do insist on seeing a comprehensive go-to-market plan. Because when you say 90% of the startups fail, that is 90% of the door, 90% of the money that just gets flushed down the tubes. So to avoid that, from day one, challenge them on ensuring that there is a go-to-market strategy that is in place, and get a go-to-market expert to evaluate that. So just like how I cannot do a financial evaluation because I am not a finance person, we also shouldn't be asking finance people to do go-to-market evaluation. So that is my ask of the people who are bringing money to the table.
So true. Manuel, I think for founders who are looking from other parts of the world, looking to expand their business and launch their products or solutions in Central Europe, what is the one advice you give them?
I can re-emphasize what already has been said. The localization is so important, because funny story is that a lot of companies from abroad, from the US, and they think that they enter Europe, and Europe is not just one country. it's all different countries, cultures, mindsets, regulations, and it's a challenge to step into all of these. So prioritization, I would say, based on the go-to-market insights, based on the research that you did in terms of market potentials, that to me is very important. And then, as I said, in an ideal world, I would see that goes hand in hand with your investors, with the support of their knowledge and their local know-how, because you can definitely not go into a market with having a great insight about the local circumstances. And I'm talking about tangibles as well as intangibles. Both need to be taken into consideration.
It's a very interesting point you made, Manuel, about like, oh, Asia is not one place, Europe is not one country, the US is also not one country. We are talking about 50 states, 50 different regulations, and the permutation combination of the type of people and their respective cultures, it's so different. And in Asia, I often hear startups going like, oh, we're going to the US. And my first question usually is, which state? And it's not necessary that they've actually thought that through. So again, it's a huge mass of space, but it is 50 countries in the US, for example. It's pretty much dealing with 50 different countries. So which country are you going to go into first? I think these are, again, part of that understanding your market, which is the big part of the go-to-market that we've been talking about.
Yeah, maybe if I could chime in with just a quick example, it just popped into my head. There was a startup founder I was speaking to. I think he was American, passing through Singapore, obviously a food tech startup, and he was, basically creating, like cultivated meat, but it was more for like pork meat or chicken meat. And, when I was thinking about, oh, what kind of countries I think of expanding to, because he was really interested in getting into APAC, right? But all of the countries he mentioned were Malaysia, Indonesia. I'd also like to expand to the Middle East. And in my mind, I'm like, oh, are you halal certified? How about the fake pork meat? Have you gotten anyone on the regulatory side of things? And he was completely surprised. So, this was definitely, a big gap where, the conversation was more like, okay, why don't you maybe, read up a bit and delve a bit deeper into this? Let's see how we can navigate this space. Before you confirm, he was actually about to start incorporating the company in those countries. And it would have been a big mistake if he had done that without all of that prior research, right? And then simply another example is also, I think, a blockchain startup that wanted to basically also incorporate and expand to countries that actually didn't have the right regulatory landscape, at least to manage or track what the blockchain startups are doing and whether the financial institutions can even support or recognize their solution. So at that point, that founder also decided to, maybe pivot and say, okay, maybe for now, let's not target these countries because we won't be able to expand as fast as we need to justify, all of the expenses that they're making. So these are just a few examples. I think, market research is so important and understanding what kind of markets you're going to be playing in.
And the nuances, the cultural nuances, I think that's also a huge part because it also impacts how you communicate to those communities, right? So without due diligence, that could be a real mistake. And then you'll need crisis management before you even start, you're building your narrative and building your brand. So, okay.
I'm just curious how Malaysia feels about fake pork. Now you got me thinking.
Actually, there's an article out there. There are some conversations about, whether you can get, the relevant halal certifications or not, and whether pork can just be sold to a different minorities, as opposed to the main Muslim majority. But that's a separate debate.
Okay, I think we have a couple of questions from the audience. I'll start with, I think it's Mariola. How much do VCs care about whether a startup is actually solving an industry problem rather than contributing to it? For example, billions have been invested for close to 2 decades in regulatory technology startups, all claiming to fight money laundering, but the level of money laundering has grown exponentially and banks complain about the solutions pushed to them. I guess this is a question for Chandni.
Yeah, that's a really nice loaded question. Thank you for that. But I would say, generally, no market is perfect. VCs, we do really care about a startup's potential to solve real problems, right? But obviously, there are always various factors that can create a disconnect, between the problem severity and a VC's investment decision. But maybe a few things, we'd look at is we usually have a bigger picture mindset, right? We adopt a more long-term view. We maybe could, look at maybe is the company making at least incremental progress that could still translate to market opportunity. We also look at maybe secondary gains. So even if a problem isn't fully solved, if the startups focusing on it are still developing valuable technology or data sets or industry insights with transferable applications, we can still invest in those startups. And I think this is the blessing and curse that comes with technology in general, right? Is there's always the threat of misuse and ethics, but that can't stop us from, trying and iterating with newer versions of these technologies, because otherwise there won't be any progress whatsoever. So I would say the more activity there is in a certain tech space, the chances of people misusing that technology will be higher, obviously. But I think if we try to, at least in the venture capital space, we try to adopt a more high level or bird's eye view and think about whether additional technologies or newer technologies can still be developed to maybe open up other newer markets. So I think there's also going to be a lot more increased scrutiny. So let's say there's a higher volume and deal count of investments in a certain space. And if there's enough, I think, news that highlight the seriousness of the problem, government regulations do usually catch up and, start imposing incentives to stray away from that misuse, and also disincentives to, punish the players who are not, using the technology well. So I would say this is just something that's not just with regulatory tech, but it can be at any sector. In sustainability, what I look after, greenwashing is always a huge issue, but that doesn't mean we can just stop ourselves from investing and innovating in technologies that can still contribute towards a carbon negative future.
I have a point of view on the RegTech solutions, startups. So I started my journey in payments. So RegTech was like a big thing there, but particularly identity management. So at that stage, eKYC was the buzzword, right? And you fast forward a couple of years, last year at the Singapore FinTech Festival, I think at minimum there were 200 eKYC companies. Now, what I'm referring to here is that, yes, eKYC was necessary, particularly since banking, insurance, all of this like high value transaction business actually went online. So it was necessary to actually get, identities checked. Now, but what we were not expecting, and perhaps was a bit counterintuitive, counterproductive for the entire sector, was because just because one person made it and they got the investment and they got the banks to actually, become a client, more and more people started doing more of the same. So then innovation completely died off in that particular area. So what was new? What has really been innovative in this area? I've not seen anything that's markedly different from what I saw, 3 years ago or between companies. So when one company or a handful of companies actually make money and they get very well invested in and they land with the client, more people jump into the bandwagon rather than taking a step back. To the person, Mariola's point is that, yeah, the problem still hasn't been solved. So another eKYC company isn't going to solve it. So what are we going to do to stop money laundering? So that innovation, I'm not sure whether has really happened. Maybe I haven't seen it, but it's not something that's, out there in public domain where, we see a lot more innovation happening in this space. At least I have not seen it.
Okay. Second question, if a company is self-funded, they are strapped for cash flow, despite having the best strategies. Any tips on GTM approach for this type of company? Where do they focus their efforts in a phased approach?
You could call us.
Alex? Pardon?
I think they could call us and then we can have a conversation.
Yes, I was gonna say, hey Manuel, what can we do to help this person?
If I can just jump in on that, right? So I think first being able to tell your story consistently is key. If you can't tell your own story consistently with each other, then chances are the potential investors or whoever that wants to actually put in the money without you being bootstrapped is probably not going to see the point. So there are some things that you can do to start off. And do get some professional advice. I'm not saying this just so that we get some business out of this, but it is because it is not easy to come to a decision and a conclusion on how you speak about yourself, even if it's just two people running the company. And instead of fighting over it, get a third-party view to come in there to help you piece this together. So that is starting point, right? So then, of course, there can be a phased approach. A very interesting thing that I saw recently, just last week, is fractional teams. I don't know how many of you have heard about this new concept that's kind of emerging in the startup space, where people like myself, people who are high technologists, people who have actually done this type of work for large corporates and have also been startup founders themselves, they are offering a fraction of their time to support startups on a paid basis, of course. So I met a fractional CTO, I met a fractional CMO. I was asked whether I would like to become a fractional CCO. So there's also a new industry that is coming up where you, as a startup, you may not be able to afford that CTO, but you can afford a fraction of his time where he becomes your fractional CTO. So there's a trend that I've just recently come to notice.
Yeah, that's absolutely right. Kalai, myself, when I first started in the startup space, it was actually meeting with a lot of founders who came to the agency that I worked at the time and really could not afford the kind of fees that the agency, because it was a network and it was a very large agency. So when I left the agency, I actually started my own kind of consulting business where I was the fractional CMO and the fractional chief communications officer, and really going into the startup and bringing the kind of knowledge that we have and into the startup space and actually building the function and the knowledge in there and actually building them teams eventually. And so it is not something that you have to get like full-time staff. And I've heard of startups where they are building their own internal teams. And I do question, because that's huge burn rate there and there. This talent cost is huge. And so how do you kind of minimize that without making huge mistakes further on? Because at that time, you're still testing the market and you need to do a lot of pivoting. So you really need to bring in somebody who actually knows the market, knows the landscape, and knows how to like pivot quickly. When if it doesn't work, you try a new thing, you know? And I think that Manuel, I think you might want to, I like your opinion on this too. Like, you know, you have worked with startups in Germany and in the DACH region as well. So how is that different, and how have they approached it? You know, we're talking about like fractional functions like that.
So first off, I have tons of respect for bootstrapped companies and companies that need to refinance themselves through cash flow, because they are probably the best evidence of the business model works, because they are already selling it, and some of these early stage startups do bring along a lot of that needed know-how by themselves, while being, for instance, an enthusiastic social media manager, and so they do know how to run digital marketing campaigns, at least to get started. And then to the extent what you were saying, Meilin and Kalai, the fractal opportunities out there, and also I think more and more service entities, and Meilin, Milk and Honey is just one of them, are opening up more and trying to be more flexible in terms of working relationships, because in these days it cannot just be about, this is the service that you get, this is the money that you pay for it, because you know, if there is an interesting business model out there, you can grow with that business model, right? So there need to be a different approach, and I can only encourage young startups to really try and identify and research for those services. I know that a lot of those services are coming from venture capitalists, from accelerators, incubators, connectors. So I definitely see that there's a light at the end of the tunnel, and I would encourage them to use as much as they can get in terms of free counsel, free consulting, and then identify a working relationship that's getting them through these early stages.
Yeah,
Even if you have to invest a little bit of money to get the expertise of you know, of somebody who has been in your shoes, I think it is worth investing. And I think that's something that, you know, having been a founder, you know, startup co-founder before, I think that was really valuable. You know, nothing comes for free. You know, I think anything that is given for free, I do kind of do question, you know, the validity of that sometimes. And I need to also respect, you know, the expert that we're seeking help from. So, you know, just to keep that in mind. Yes, Chandni, before I so rudely interrupted just now.
No, it's okay. No, basically it was just, I think there is a lot of support out there for startups, especially early stage startups. So, you know, if there's anything I can always say, you know, to the founders, you're not alone and you don't have to be. It's all about just, you know, trying to find the right people to help you. And exactly like what Meilin pointed out was, you don't want to just get help from anyone and everyone, right? You want to be very protective about your energy, your resources, your time spent, and make sure that whoever's network you're piggybacking off of, or whoever's expert opinion you're getting help from, you know, it's really something that is of value to you or to your company. So I think just depending on what country that you are based in, you know, there's a variety of incubator programs, you know, you could join. There's Antler, Entrepreneur First. Plug and Play also, you know, launches. We have our own accelerator programs. I think 500 also had those. And a lot of the benefits that come with those types of programs is there's usually pitch polishing workshops. There's usually a legal expert that will come in and maybe discuss, you know, what are some basic terms for you need to know about shareholding, or what are the basic terms in the term sheet you need to be aware of. You know, so a lot of these workshops are for free, at least initially. And then if you want to, you know, take that person up on, you know, maybe a more direct or customized service, you can take them up on it. And I think just attending events as well is also a great way to be connected with everyone in that ecosystem. So you'll never know who you meet. You know, they're investors, startup founders, program partners, you know, all of them, all wanting to participate in this whole innovation ecosystem. So I think there's just tons of people out there. The worst thing you can do to yourself is to just not talk to people. I think speaking and communicating and being active on, you know, the relevant social media channels is a great first step.
Yeah, I totally agree with you, Chandni. I was very fortunate to be selected for the Women's Founder program offered by AWS and Tiger Hall, and that was invaluable. I mean, it was a year of, you know, access to, you know, advisors and just sharing among the women founders, you know, what we go through. I think that's also super important. Now, this is all the time that we have. I think we can continue to have this conversation, but then I'll need some wine to go with. But so thank you everyone for joining us on this conversation. I think before you leave, we would love to hear from you. You know, and what your thoughts are on this session, and what are the relevant topics that you would like to learn more of. So do give us your input. You can find us on LinkedIn, add us, and, you know, DM us if you like to. We will be selecting, I think, 3 startups to review kind of their GTM strategy. So you'll hear from us via email. So please look out for our message, check your inbox or the junk folders. And so thank you very much and have a great day and evening.
Thank you. Bye.
Thanks.
Thank you, everyone. Bye.